I'm Georgia Williams with the Investing News Network, and I'm here at the New Orleans Investment Conference. Joining me today is Mickey Fulp, founder of the Mercenary Geologist. Good morning, Mickey. Nice to see you.
Nice to see you, Georgia, and it's my pleasure to speak with you again.
Thank you. I always enjoy our conversation, so let's just jump right into it.
Okay.
Your presentation here at the investment conference was around the topic, how can America remedy its mineral dependency? And I think a lot of people are shocked when they find out how dependent America is on other countries for important resources. Could you touch on this a little bit for our listeners?
Sure. So the USGS, U.S. Geological Survey, analyzes 97 different metals, minerals, and materials commodities on a yearly basis, and puts out mineral commodity summaries. Turns out that of those 97, 64 of those, the U.S. is dependent at least 1/4 of its supply on generally unfriendly, unstable, unsavory governments, some rogue governments in the world. Specifically of concern would be China, Russia, arguably not our friends, not our economic business models of free capitalism. And also South Africa, which is not the most stable place in the world either.
And we saw China sort of flex its muscle earlier this year in the terms of rare earth, and the U.S. sort of scrambling a little bit.
Well, and the Chinese have done that before. It started in 2009, created a rare earth element boom on the junior stock market. That busted by 2012 or so, with no projects developed anywhere else in the world other than Molycorp, which went bankrupt. Chinese cut prices, forced Molycorp into bankruptcy as a public company. That's now since come back under private hands, mainly U.S. held, but also with Chinese 10% participation. But what we really lost in the whole Molycorp debacle, although they still are producing significant amount of rare earths from Mountain Pass, all the processing still goes to China. What that did create, though, the rare earth bubble is from the Western world being 98% or so dependent on Chinese sources for the metals or the minerals themselves. That's now down to about 65%. So it did force or allow some other deposits to come in production. The real issue now, once again, is the processing and separation and the magnet making, the final products. That's still all done in China.
And last time we spoke, you had talked about how all the rare earth deposits are sort of discovered already and they're not very viable. So I think that's important for investors to know as well.
Right. A lot of the deposits that we did when we worked in the junior business in the early 2010s developed or discovered and took to advanced exploration or even economic studies. Specifically in Canada, some major discoveries made in Canada, but because of infrastructure remoteness in Canada plus metallurgical difficulties that still haven't been solved with silicate minerals containing rare earths, we came out of that with knowing where all the deposits are now and realizing that they have difficulties and were likely, at least on a larger scale, not developed. There were only 2 mines of significance developed during the boom. Molycorp put Mountain Pass back into production, and then Lynas Corp in Western Australia / Malaysia, and that's about it. And then there's some smaller ones in Africa and couple of other small ones in other countries, but and one thing that's happened in rare earths is the demand has not increased. So these projections of increased demand never came about, as oftentimes they do not. So
here there seems to be a sentiment here that we're heading towards a global economic crisis or a meltdown, and I just wanted to get your thoughts on that.
Well, I think that's partly of the crowd that attends this show. But certainly the world has economic problems. It can be argued that the U.S. is still the only place where the economy is booming, and it is booming here, but at the expense of increased debt. You know, we have something $23 trillion in debt. We continue to run budget deficits and trade deficits, and we print money, and we're printing money, and we're finding ways to increase the money supply through what they refuse to call quantitative easing anymore, but that was some sort of made-up term. It doesn't make much sense anyway. Essentially what's happening is the Fed's buying back the U.S. Treasury bonds, and that's not going to work in the long term.
Now, we've had 3 Fed cuts so far this year, and they're meeting again in December, and there's talks that there could be a 4th. What are your thoughts on this?
Kind of the guidance that I see from the Fed, if you can actually put any stock in what they say, is there probably won't be an additional rate cut. The problem with these rate cuts, I mean, they've kept the economy going, certainly. Money's cheap, but you're increasing, though you're printing dollars, or not really printing that much anymore, but creating money with keystrokes, and that at some point is going to come back to bite us. When we none of us know. You know, we've got people on the floor here that have been saying this since 1979. It hasn't really happened yet. I think we're all. You look at in the history of fiat currencies, they all fail at some point, and they all collapse at some point. Is that going to happen in the next year? Probably not. Is it going to happen in the next 5 years? Maybe. Is it going to happen in the next 10 to 20 years? Probably. Ultimately, it's going to happen. I probably won't be around on the planet by the time it happens, to tell you the truth. So,
do you think that we should adopt the gold standard again?
Well, there's just not enough gold in the world to support the size of the economy. So maybe a basket of metals is an idea, but currently the U.S. Dollar remains overwhelmingly the world's reserve currency. I don't see that changing anytime soon, even though the Russians are now taking oil contracts only in euros. Well, good luck on that. The euro is a currency that I'm not particularly fond of because it's a currency without a country, so until the U.S. dollar no longer is the world's reserve currency, I want to own dollars.
Now,
I own plenty of gold too, but I want to own some dollars too, because that's a medium of exchange accepted everywhere in the world. You can go anywhere in the world with a Franklin in your pocket, a U.S. $100 bill, and it's going to be accepted.
Very true.
Always want to, but I'll damn well guarantee you when you get out a cab in Dresden in Germany, which used to be one of the easternmost cities in East Germany, you pull a $100 bill out, and the cabbie says, "Oh, I can't take that." And you pull out American Express, and she says, "I can't take that either." And I said, well, how are you going to get paid for your cab? Go in the hotel, exchange this $100 for euros, and give me change in euros. But this is what I have. You know? I actually did an experiment. This is about 6 or 7 years ago. I went to Europe. I worked in 6 different countries in a kind of a around-the-loop tour. And I did an experiment. I said, I'm going to take U.S. $100 bills, and I'm going to take American Express card, and I'm going to see if I can get around Europe on it. And I did. And the only problem I ever had was in Dresden, in a taxi cab late at night. And it's like, well, do you want to get paid for your cab ride or not, you know?
Probably she wants to get paid.
She wants to get paid, absolutely.
So economic uncertainty is always good for the gold sector. Where do you see gold going as sort of the uncertainty mounts, or, you know?
Well, I think it looks bullish for gold. We've stabilized at $1,500. If you took, I haven't done this, but I think if you took about the 50-day moving average for gold, it's probably right at $1,500. It go a little lower, go a little higher. I think the lowest it's got is 1462 or something like that. The highest is 1562, but it's been bouncing in there. So it's built a base, a very strong base at 1,500. Where it's going yet, who knows? You know, economic uncertainty in the world, not specifically in the U.S. right now. We just hit all-time record highs in two of the three major indices on Friday. And the Dow was only 2 points off its all-time record high. But lower interest rates are good for the dollar. Economic uncertainty is good for the dollar. It's still a safe haven. Geopolitical risk all over the planet is good for the dollar. So all in all, in a broader view, I'm bullish on the dollar going forward. I'm not going to tell you what price it's going at. I'm not going to tell you where it's going to go, so don't even ask me those questions, because I learned long ago to try to predict prices and timing is very problematic, and you only get in trouble doing that.
Fair enough. So do you think there's a lot of talk here that silver might be the actual better investment right now? Are you of that opinion?
Yeah, well, that can be argued because the gold-silver ratio is completely skewed to gold right now. It's 84 as of Friday. Historically, since 1971, we've done all the numbers and all the calculations. And since January of 1970, the mean has been about 57, and the median's been about 59. So we're way on the upside of that, and at some point those ratios will normalize, and which is bullish for silver. So if you're going to buy bullion right now, it probably makes sense to buy either platinum or silver. And especially with silver, when that normalizes, you sell all your silver and convert it to real money, which is gold.
Now, talking about another gray metal that is a little controversial because some people think it's precious, others think it's industrial. Palladium has had a really interesting month.
Well, it sells at precious metal prices, but it's not a precious metal, because 95% of it is used in industrial processes, mainly gasoline-powered automobile catalytic converters, petroleum catalysts, some other uses, but only about 5% is ever used to mint coins or as jewelry. When the price was cheap, which it normally is with respect to platinum and gold, poor people in China would make jewelry out of platinum or palladium. That's not the case anymore. The price hit record high. It actually went a little bit above 1,800 intraday this week. I think it closed at 1790, thereabouts, 1788. All-time highs, continues to make all-time highs on deficits, even though the automotive industry is shrinking worldwide this year. New car sales are shrinking. There's been a dearth of above-ground palladium supplies partly because of difficulty of platinum miners. Palladium's mainly a co-product or byproduct of platinum mines, and there's an oversupply of platinum, and because of that, most of the platinum in the world is supplied by South Africa. Palladium comes from a variety of sources, including South Africa, Russia, U.S., Canada. But that's strictly a supply-demand fundamental problem, and I don't think that's long-lived. So we'll see. I didn't think it was going to 1,800. I didn't think it was going to 1,200. It's just gone out the roof. When metals go exponential, or any market, financial market of any kind, prices go exponential, they will go parabolic and come back down the other side. So I wouldn't be buying palladium right now. I'd be buying platinum, you know?
It did catch a lot of people off guard.
Yeah, I don't know anybody that expected this sort of parabolic or exponential rise. Hadn't gone parabolic yet, but it will.
So with all of...
I can't tell you when, but it will.
So with all of this sort of weighing on the various sectors, how can investors educate themselves and be prepared to get involved in markets?
Could you repeat that? Can we cut there and repeat that question? I didn't quite get the tone of it.
So with the economic uncertainty mounting and all of this, news happening in various sectors, how can investors educate and prepare themselves?
Well, I hope you own gold. Because it is real money. You can buy other precious metal, but you really, in times of economic uncertainty, it's best to have safe haven. Right now, safe havens are gold and the U.S. dollar. So prepare yourself by having some guns, some gold, some gas, some goods. Have a bug-out bag by the door, and if you think the economic collapse is imminent, then you're prepared, know where you're going to go to live in survivalist mode.
So switching gears to the rare earth sector, there's been a lot of talk between Australia and the U.S. forming JVs to sort of remedy the supply issue. How do you see the rare earth story progressing into the new year?
Well, that's Linus Corporation. They did a deal with some private Texas capital, build a separation plant somewhere in Texas in the Gulf Coast. That's good. Really the missing part, or one of the missing parts, the next mine to market in the supply chain for rare earths, we need to develop processing and separation capability in the U.S. Linus is doing that. Junior called Medallion Resources is attempting to do that. So, but then still all the magnets and all the magnet technology was sold to China about 20 years ago. So you still have that problem of rare earth magnets. Hopefully that at some point that we'll recapture some of that technology in the U.S. We do not want to be dependent on China for rare earths. But by the same token, U.S. military, U.S. industrial users of rare earths have developed new supplies, substitutions. No longer phosphorus part of your automobile. Now we're into colored LEDs. So those sort of perturbations tend, in a relatively free market economy, to even themselves out. Anybody that makes anything want to get it as cheap as they can and sell it to the public as cheap as they can with an acceptable margin over cost of production. And so the market tends to even itself out because of that. We are not nearly as dependent on rare earths now as we were when this whole thing came about 10 years ago.
Well, thank you very much.
Some rules, as it always does.
That's very true. Thank you again for your time, Mickey. It's always a pleasure talking to you. I'm Georgia Williams with the Investing News Network.